Hey guys, it is May 16th, 2026, here with your after hours recap for Friday. Hopefully, you guys have all gotten your weekend started off very nicely. Let's just start to talk a little bit about what was going on the market on Friday. And I talked a little bit about this during pre-market prep. You know, you're getting a bit of a gap down in the ES if you are looking at the ES or the NQ. And you're getting this gap down, and a lot of people, and myself included, you've been getting these gaps, and then you've been getting bought up. You've been getting some weakness, you've been getting bought up. You've been getting some weakness, you've been getting bought up. And what I would remind everybody is that when you get a 30% move for the Qs, it's crazy how on April 8th, on your follow through day, everybody is tentative to buy this gap up, even though it is a follow through day, and then add to positions from here on out. And that's when I was getting aggressive on Micron, on Amazon, on these lows. I literally bought Dell, I bought TQQQ. You're getting your dock in, just a handful of days later. And your ARM, it's like all of these names you're acquiring early in the trend. And then now all of a sudden you make this, extravagant move, this insane otherworldly kind of move just weeks later. And everybody up here then gets so aggressive on brand new merchandise when personally I've been trimming into extensions from the 50-day on basically everything. And that includes Micron, a name that, I like a ton. But you can't get to 10, 11, 12, 13, 14, 15, 16 times its ATR from the 50, and then the Qs get to 10x ATR from the 50, and then just think that every little single dip is buyable. I kind of gave the comparison of SanDisk. Over the last 8 months, without question, zero argument or dispute from anybody, this has been the strongest stock in the entire market for the last 8 months. And then I said, guys, even SanDisk, after a huge move, goes sideways for 7 weeks. Even SanDisk, after another huge move, goes sideways for 9 weeks. And then SanDisk goes on another big move. I'm not saying it needs another 7 weeks, but you get the point. And you can relate that directly back to the Qs and say, after you get a huge move, you need what? Right? And it was the exact same thing. After you get a huge move, you get 5 months of slop and what looks to be maybe a little bit of a freak out below the 200. That's normal after a huge move, right? Where this thing goes up 58%. And then now all of a sudden in a straight line, even faster, you get a 30% move. And then every little single dip becomes buyable. Is insane. It's insane. And on Friday, pre-market prep in the Discord, I was telling, students, I was telling you guys on pre-market prep, guys, if you've got winners, let them work. If you've got brand new merchandise, and I had brand new merchandise, but I had been sizing my newest positions further down. I had some HUT, and I ended up getting stopped out of that. I had some Bloom Energy. I ended up getting stopped out of that. I had some Cypher. This one was cut for break even. I had some ads onto my ARM position. I took this off at break even. So you start, and not even break even, really for a little bit of a loss. And you start to think to yourself like, okay, the market's giving me a little bit of feedback, even if it's just short-term feedback, that we need to slow ourselves down. And on my newest positions, you trim into strength. You've done a really nice job on that front. And then on new merchandise, you've done a really nice job on the front of, I'm not going to get majorly aggressive up here. I'm going to make sure that I'm sizing positions down because we're historically extending. And when I say something like that on Twitter, all of a sudden you get a lot of pushback from people like, nope, it's a regime shift. Nope, we're going way higher. Dude, every pullback is buyable. Okay, let's slow ourselves down a little bit. For anybody who knows anything about a consolidation, normally the first pullback can be the steepest. And, we could visit the 20-day, and that could be, a 5-6% pullback, which, by the way, would be completely healthy. And then we have to build out for 4 or 5 weeks from there. And I'm not saying that that's going to happen. I'm just saying that before you go plowing into brand new merchandise, let things tighten up. Of course, there are going to be groups that are acting well while the market's maybe going to be consolidating. And there's a few of them, we'll talk about them here in a second. And we'll just talk about the first one. When you've got these solar stocks, Sedge, unbelievable. Enphase, pretty damn fantastic. That's great to see. You got cybersecurity, CrowdStrike, amazing. PanW, new all-time high as well. Fortinet, same story. Datadog, great. And one of the things that I'll tell you is stocks that have gapped up on earnings, Fortinet, Datadog, even Twilio, DOCN, some of the semiconductors. Pay attention to those. That's your watch list for the next 3 to 6 months. The names that are, and I'll reiterate this, the names that are acting best during a market consolidation or correction are the names you want to be paying attention to continue higher after the market is done correcting. So that's just some food for thought. On Friday, we finally started to see, and I noticed people talking a little bit about the metals, but GLD was living underneath the 50-day, and then you get a gap down on Friday. That's not very good. Silver showing some weakness on a gap down as well. That was super, super ugly. Copper, well, I guess we could just look at CopX. That wasn't very pretty, down 7%. So, what do you want to make of that? The URA or URNM, not too pretty as well. Yes, you're building a base, but, my only real issue with URA, URNM, and I'm very, very familiar with the nuclear sector because I've done way more research on it than maybe I should have. But you don't have the price of U3O8, which is enriched uranium, going higher. It's basically saying, like, can you expect crude oil stocks to go up if crude oil's not going up itself? Not really. Can you expect gold mining stocks to go up if gold is not going up itself? Not really. So it's the same thing with when I look at Cameco. Can I really expect Cameco to go higher when the price of U3O8 is not going higher? Not really. So that's just some food for thought. Of course, there was some digestion across the board. You've been seeing for the last few days Intel take a little bit of a breather. AMD start to take a little bit of a breather. Even something like SanDisk take a little bit of a breather. And, Qualcomm, which has been a nice mover, a little bit of a breather. And that's going to be common in a market that had just made a huge move. And if you're not peeling into strength and you didn't sell some into this extension for Qualcomm, all of a sudden, and if you want to hold it, it's down 20% in 3-4 sessions. And that, again, goes back to, I personally like to trim into extensions 7, 8, 9, 10, 11, 12x ATR from the 50. Then when you pull, and you do pull eventually on everything, that's just the laws of gravity, basically. You're not holding that entire position lower. When it builds some higher lows, when it finds support on a rising 10 or a 20 or a 50, and it builds a higher low, builds a high type flag, builds a high type pennant, builds a low cheat, gives you a UNR, whatever kind of setup you understand on the technical side, you can go back and add to this thing, no problem. But you're not holding a full position size, down 50 points. So just, again, some food for thought. And you've been seeing on the flip side the oil and gas names holding up pretty well. I mean, USO is almost at a new all-time closing high. XOM is starting to act a whole lot better. MPC is also starting to look pretty dang good here. SLB is looking pretty dang good here. So it's like you've got a bunch of oil and gas stocks which are acting great. And if that's where money's going to go, okay, fantastic. I personally find it a little bit hard on that trade right now because it's just going to be so news driven that maybe that's not something I want to deal with. And again, there's also what's going on is you've got other sectors working, right? You've got aerospace and defense still working. You've got this younger stuff, SATL going. SATS is hanging in there pretty good. Lunar's working pretty dang well. Rocket Lab's honestly been amazing. ASTS getting back above the 200. That's what you like to see. So there's really still a ton going on out here. So yeah, I'm just kind of the opinion, and if I'm wrong, fine, but I'll still have, the Amazon and the Micron and the NBIS and the Dockin, and I'll still have plenty of names working for me on the long side. So that's good. And then I did take some SQQQ on the long side as well to play as a little bit of a hedge on Friday. We'll see how that ends up panning out. but you've got the dollar ripping. You've got not ripping, but you've got the dollar, starting to bottom potentially, which would not be really good for emerging markets. And if it's not good for emerging markets, that would include Korea. If it's not good for Korea, that means Samsung's going down. And if Samsung's going down, then that's the memory names, and that's your memory theme. It's a domino effect. And I'm hopeful that that's wrong, but I don't want to see rates ripping. I don't want to see the dollar going up. I don't want to connect dots like that I don't know for fact will be true. But of course, I'm thinking about it like back of my mind. And as a newer trader, if you're trying to learn from me, that is not going to put money in your account, right? That is not going to thinking about, oh, dollars going up, that's not great for emerging markets, that's bad for Samsung. That the domino effect does not help you. You need to learn your entry tactics, how to find the stocks to trade, how much size to take, where to buy, how to trim, how to trail, et cetera, et cetera, et cetera. Improving your situational awareness, taking it like layers further when you start thinking about the dollar and emerging markets is not what I would recommend for a newer trader trying to move the needle on their personal portfolio. But yeah, there's still quite a bit going on in the market. I still think that this market continues to be super interesting. Obviously, TAN, from a group perspective, was the best one on Friday, right next to USO and right next to XOP, which is oil and gas exploration. And then obviously cloud computing was a pretty nice one. And then if you start to look at CIBR, which was cybersecurity, that's obviously pretty damn fantastic as well. Oh, and software. I cannot forget about IGV. This is one that I own, and you're starting to see Microsoft hopefully acting a little bit better and maybe bottoming here. Who the hell knows? But look, I'm finding it hard to be negative on the market. The market just needs some consolidation. That is all it needs. I'm not of the opinion, and I'm not going to be sitting here screaming from the rooftop, it's gone up too much. Who gives a shit? I'm sitting there saying, man, I've never seen this many earnings gap ups before. That's my list that I'm focused on, and you should be too. I mean, there's literally SIMO, SITM, MXL, TWLO, Dokken. I mean, just and these names are gapping up, and they're either holding up really nicely or they're following through, right? FTNT could have been bought, on the 8th. So it's like names are gapping up and they're following through. It's an incredibly powerful environment. Money is going to these names that are gapping up on earnings. Not all of them, but for the most part, I've never seen this many names gapping up. You have to be paying attention to them. So for me, that's kind of where my head's at. Like I said, there's a lot going on in the market right now, but just because there is does not mean, you need to force yourself in. One of the things that I've been talking about, I think it was Wednesday, Thursday, and Friday, selling kept dominating the tape. You've been kind of looking at breadth, and then you get to Thursday and you look at NAIM, and you're like, boy, they've deleveraged themselves. They went from like 95 on NAIM to 70 something on NAIM, and then you look at COT data and they're getting more short. Like, this market is as crazy as it sounds. It's not really over-owned. I know that sounds nuts to say, but it's just not. So yes, breadth is deteriorating. Institutions are getting rid of about everything else. I look at XRT, which is the retail ETF. I mean, this thing is getting hit, and it's not the only one. You got XLV not doing a lot. You got XLF below the 200, not really doing a lot. You got industrials, just chopping around here. You got utilities not really doing a ton here, losing the 200. Consumer discretionary not really doing a ton, losing the 200. And you got consumer staples trying to hang in there above the 200. It's these damn cigarette companies and your Costco's of the world as to why I think this is acting well. And otherwise, it was the XLE and the XLE only on Friday, which is not ideal. I mean, even your materials, XLB, not doing much, and that's what happens when you start to lose some of these rare earth names as well. And yeah, I mean, again, there's just a lot to focus on at the market right now, but you do not need to be the first one in the pool. There's only really two things that are going to happen here. Either the names that have gotten beaten up and the sectors that have gotten beaten up are going to see money flow back into them, and that's going to lift breath. That will allow the leading groups to consolidate some because they've gotten tons of love recently. Or number two, those leading groups are going to pull back as well. And with breath already being as poor as it is, money's going to flood out of the market. And we've already been kind of seeing that happen underneath the surface. And that's why when you look at like your some breadth metrics, you're already kind of quote unquote oversold. And that's what happens when you look at a sector like this XRT. And, you know, sectors are just actually getting hammered out there. And on the flip side, you've got this XRT ETF, or XLK ETF that's been going vertical. And this is like damn near 40% of the entire market. So it's like the money that where it's going, it's the AI trade, and basically the AI trade and the AI build out only. And everything else is just kind of put on pause right now. And you're either going to get some of these digest because they are maybe a little bit crowded, and money can kind of go to other places, or you're going to see money come out of this quote unquote AI trade for a little bit, and then everywhere else for a little bit while this AI trade consolidates, and then maybe we can tick up higher from there. We'll see how that ends up playing out. Or it could just be that money continues to flow out of all these other places that have gotten beaten up. Maybe software can take the lead a little bit, as we've been seeing as of late, and semiconductors can consolidate, and maybe money doesn't have to go to anything retail related for the time being, or communications, or consumer staples, real estate, etc. So yeah, I'm just trying to stay focused on the names that I own. Where am I buying? What am I buying? When am I buying it? How much of it am I buying? How am I trimming? How am I trailing? You have to have answers for those questions. If you don't have answers for those questions, you're really flying blind. You cannot get FOMO in this market. Look, you're going to miss stuff all the time. And then here's the problem. Not everything is flying right now. So it's not as easy of a market as maybe people think, unless, of course, you are being very selective on what names you want to own. And if you're focused on the AI build out, semiconductors, memories, photonics, etc., you're doing fine. Everything else is a little bit more difficult. And my portfolio is effectively that for the time being. So we'll see what happens from here going into next week. But like I said, you do not have to be the first one in the pool. If you don't have an insane amount of exposure here and you've got 30 to 50% exposure, I think that's fine. I know some people who are more exposed and they've got in some great names earlier. I think that's fine. Trim, trail, follow your process, let your names work. But for new merchandise, super tight leash. So anyway, hopefully you guys stayed safe this past week and the week prior. Hopefully the market will just give us a little bit more consolidation. Like I said, you get a day like Friday. It's a Friday. You don't have to buy the very first pullback in the market on a Friday. It's just not necessary. So yeah, hopefully you guys, again, stayed out of harm's way on Friday. I know I did. Very, very little to do. And I will see you guys all bright and early on Monday morning. Cheers.